Hey guys, wanted to give an update this weekend on what I'm seeing in the market and how I'm going to react to the next week or two, and then how I'm going to change my approach and positioning going forward for the next year or so. So, a lot of you have seen me talk about this chart. This is the 15-year look at the S&P 500. We've got a very clear channel that price is moving in. This is why we had that strong reaction to tariff day. We had the very bullish push here, very obvious support and channel confluence here. But the reason I bring this up is that we're showing a very clear distribution pattern here at the top, and it's time to get bearish for the year. Now, that doesn't mean that today is the best day to get bearish, or Monday, I guess. So we're going to zoom in and talk about what I'm seeing and how I'm going to react to the next week versus the next year. When we look at this, we see that there's a really clear top being formed, and I'll bring up the image of a Wyckoff distribution schematic where we can see that we're forming this distribution pattern here. So we've got the break through the former all-time high. We've got what might be the AR here, ST, SOW, UT, and then we had our up thrust here above the top. And we're starting to see this breakdown where we've got our LPSY, and right now we're sitting at the support zone. Now, in this schematic, it does show that the first kind of bearish test of that support zone will break and break down. But I personally am seeing a little bit of bullishness here in the short term, and I'll explain why. And this is all depending on, since we're in a war right now and anything can happen, you have to pay attention to what's going on in the war, because when the sentiment is good that it might end, you're going to see bullish days. If a nuclear bomb is dropped, then the market is going to just absolutely tank right away. So this is all with the caveat of keeping an eye on the news. Friday, we had price come into this 650 level, overshot it by a little bit to 645. Again, this is really a zone. It's not a firm price level. Anything within this zone counts as a support zone. So we've got a pretty clear pattern that had been forming here. We got a bearish push off of this trend line. There's a couple different ways to look at this bottom trend line here, depending on where you're connecting the dots. And that's where there's some subjectivity to trend lines as well that you have to be careful of. Actually, now that I bring this one up, this one's probably the most clear, because with trend lines, you really want to see parallel between the two. So when we take these two off, you can see that these are pretty parallel. So we did come down and tag this exactly. And that's again the power of trend lines in the short to medium term. So what am I expecting in the next week or so? I'm actually expecting a continuation of what we saw Friday. After hours, Trump came out and said, right around here, I think it was, he said that he was thinking about ending the war soon. And we had this nice continuation for $5 more on the S&P 500. And then that kind of withered away towards the end of the day. But when we look at this descending channel here, there's a couple of key pieces of context that we have to look at. So I'm expecting, honestly, in the next week or so, price to become a little bit bullish, because the sell-off has gotten people pretty bearish, and the market loves to trap late bears. So people that got bearish here, the market really wants to screw them over. So that's why we don't want to be the late bear. We want to be early. Or I'm sorry, we want to be early up here on a different entry. So these late bears are going to get crushed. The market's going to reverse back up next week. This is my prediction. We're going to head up to, we've got a 4-hour 50 period moving average here at 666 that aligns well with this broken trend line here. So that's one area of interest I'm looking at, is a push into 666. And then when we start to look at the daily chart, we can see that there's the potential for a move up above this trend line again, we've got this confluence here of this medium-term trend line, this broken trend line here in the 665, 670 area is a great place to start getting bearish longer term. But I am expecting a potential kind of false breakout here of this channel. And again, if you're a day trader, take these, as the day comes and in position according to what you're seeing that day. But for longer term investors and medium term investors, I am seeing this coming up and potentially getting into the golden pocket here for a reversal. And we've got a couple of key pieces of context there. So the first being the golden pocket between 61 and 78 is when trends will reverse and see this continue down. But then we're going to have this 50-day moving average come down a little bit. And by then it will be in the same area. So anybody, any algorithm or person who's selling the 50-day moving average is going to drive this down. Golden pocket sellers are going to drive this down. So you're starting to see some confluence there and some volatility and some volume that could come in to support a bearish move there. So that's what I really like to see here. So what does that mean for the positions that I hold? I have a couple longs that I'm in right now that I just don't really like. So I'm going to use this bullish push to exit those longs and become pretty much fully bearish and fully allocated to leverage short ETFs and puts on stocks, overbought stocks. So as we get into this area, that's where I really want to exit some bad positions and really turn my attention to the short side. Let's take a look at the Qs and we'll show you how this really lines up pretty well. We're not going to redo the whole spiel I just gave you, but same pattern we have here, former resistance turns support. We're into support right now, and we're potentially seeing a break here. We're going to have to contend with this trend line. We'll see how that goes. And then if it does get a push up, we're looking at a golden pocket here around 620. So the Q's looking for that to short around 620. But honestly, tech is the weakest sector. Tech is going to get absolutely destroyed for the next year. It's already been beaten up, but it's going to lead the market down, and I'll show you that in a second. But as we get into 600, which aligns with our 38 Fibonacci, but again, the golden pocket here at 620 is where I would go balls to the wall short on the market, especially the tech sector. So watch for those pushes up here on that false breakout. So when we look at things here like Apple, these names are going to lead the market down. You don't believe it yet, but don't get caught with your pants down here. Apple's going to absolutely get crushed, potentially go to 200, then 120. Amazon will get crushed once it breaks this trend line. Will be going to 150 and maybe even 80. Call me crazy at your peril on these. Google will get crushed once it gets below 293. Will be going to 200 to 150. Worst case scenario, it can go all the way down to $85. Meta is starting its move down. Perfect distribution pattern here. Below 500, this is really going to get crushed to 400. Worst case scenario, 100. Microsoft has already broken down from its pattern, so it's quickly going to 350, going to 200. Worst case scenario would be 130. NVIDIA going to 150, potentially to about 80 or so. Worst case scenario, maybe 50. Tesla also in a bearish pattern, going to 200, and we'll see what happens there. So again, my thesis over the next couple of weeks, exit longs, take a small loss on some of those, and really start to load up for the bear market. There's a ton of money to be made in bear markets. Please don't sit long in stocks and have hope that these tech stocks are going to recover. They will be going down. You've had your run. It's time to take money off the table. So because this recovery is going to take years. When Google gets to 150, you're going to be looking at maybe 5 to 10 years before it ever gets to 300 again. There's plenty of stocks in the market. Please exit these names responsibly. At least for the love of God, sell a portion of your position. Start to set some stop losses here, but tech will lead the market down. And this is kind of your last warning before it does so. So hope this is helpful. I'll start to share some stocks that I specifically like given the macro events in the group. So look forward to those.